Hello, this video will help us understand how to use Odoo's deferred revenue feature when we have situations where we need to incur deferred revenue and we want to reallocate that into revenue over time. So this is an accounting function, and so the first thing we're going to do is in the accounting module, go to our configuration and our deferred revenue models. These models will be very similar to what you create with their depreciation. You're essentially needing to tell Odoo when to reallocate a certain value into another account. So here we have the revenue recognition of a maintenance contract over 1 year. We're specifying that over a 12-month period, we want to generate 12 entries. Then on the right-hand side, we have our revenue account, which will be the end product. So all of our transactions should eventually end up into our sales or our revenue. Now, however, when the sale is originally made, it goes into your deferred revenue account here. This is a liability, as you can see. Because what we essentially do is when we generate this deferred revenue, we owe our client something. And then we specify a journal. I created one just for deferred revenue to keep things a little bit more organized. And now that we've created the deferred revenue model, we need to now go to the chart of accounts to set up an account. Version 13 introduced the feature of having accounts create records such as depreciation or deferred revenue or even prepaid expenses. And so in this case, we have a deferred revenue I set up as a liability. And when we set up this account even further, we will see that there is a automatic deferred revenue generation. And so we can create it to have it create in draft, or we can have it automatically create and validate. Then we need to point it to the correct deferred revenue model here. That's all we need to do. Now, before we move on to the sale, we need to actually set up a product with this account. So I did create a maintenance product here for a contract 1 year. And so this will create a subscription because in this case we have a 1-year contract, a subscription with us that they can renew annually, $12,000 a year. So we'd expect to see $1,000 to move into our income account every month. And of course we have a product category which can house the financial account. However, in this quick demonstration, I'm going to use the income account here. Now, once that's done, let's go make this sale. So we start with the sales process just because this will automate the subscription creation. So we'll pick Google. They are going to become a client of ours, and we are going to add our maintenance. So now we have 1 year, $12,000. We confirm, or we go through the process of sending by email, receiving that signature, and getting credit card information. In this case, we're not particularly worried about that. Now we have a subscription automatically generated, which is what we want for 1 year. And if we go back to our sales order, we need to invoice. Now, because our deferred revenue recognition process is based on your financial account, we need to have a invoice generated. And with that account specified on our maintenance product, the deferred revenue account will be hit for $12,000. And when we post this journal entry, instead of hitting our revenue, crediting it, we will be now crediting our deferred revenue, a liability, which is on the same side of the equation as our equity or revenue account would be. Now, of course, we register the payment to close out our accounts receivable, standard accounting 101, and we're good to go. Now, you'll notice a smart button appears, our deferred revenue smart button. This is what we want to see. What's going to happen is it automatically creates this deferred revenue account, and we're going to have the value for $12,000. The date is today, and every month for the next 12 months, it's going to take $12,000 divided by 12 and move that into sales from your deferred revenue, as you can see on the right-hand side. So if we look at the transactions down below, at the end of this month, on January 31st, we are going to see this transaction here, where we're going to credit our income finally for that $1,000, and then the deferred revenue liability will be decreased by that same $1,000. So this will automatically populate every month. And all we have to do is just validate and confirm if we like to see it. Now that's the basics of it. We can also modify or reset the draft should we need to, or save this for a future date. If there's any questions, let me know.